So hi guys, welcome back to our channel and to the 23rd episode of the forex market breakdowns. So this week we're going to do a breakdown of about 5 pairs. Last week we never did one because we had the boot camp, but this week we'll be doing one. The boot camp was amazing. We'll be sharing some of the videos and the clips that we were able to shoot from there on our YouTube channel soon, so you can watch out for that. So in the breakdowns I'll start with I'll do two commodities and 3 currencies. So I'll do oil, gold, then I'll do euro yen, euro USD, and maybe USD CAD, and we'll be done for the day. So I'll just dive straight and start with oil. So we'll start off the analysis from the weekly chart on oil, and last week we highlighted this pullback to touch the broken trend line, which was the 78.6 pullback, and a week after that you can see momentum coming in. So last week we never did a breakdown because we had the boot camp, and it was during that week that oil dropped almost 500 pips, so 5 points from the $60 mark all the way to 53.5. So a very big drop on oil, 61.8. So now the question is, will we form new lows, or will we be supported by the $50 mark, $45 mark, 47.5, and you have 52.5 going down to the daily chart? But for now, this one I'm more bearish than bullish. I'm looking forward to creation of new lows, probably at S1 $40 and S2 $30, but that's long term, probably by the end of this quarter or next quarter. So going down to the daily chart to look at what oil is doing currently. On the daily chart, it's also evident that the pullback can be seen clearly. So we had this drop, an impulsive wave, then we have a correction now, moving to 64.5 acting as a good resistance level. First drop to touch 60, a correction at 62.5 rejected, and we had this continuation all the way to 52.5. So at 52.5 yesterday we had the close of an inverted hammer, which signals that perhaps if we get some bullish engulfing today, or a good candle signifying bullish momentum, then probably we'll get a pullback to touch the pivot point 57.5. But you should also be cautious on oil. It's not a must for oil to make a big pullback. We can also have a consolidation coming in at this point, and if you look at the 4-hour chart, then you can be able to map out the consolidation zone clearly. Yeah, so this is the 4-hour chart on oil. Probably we'll get a consolidation between 52.5 and $55. As you can see already, we had a move, a rejection, a drop again to touch the same level, and currently it seems like a pin bar is being formed at the 52.5. So probably a move to touch 55, we'll get a rejection of this 21-day moving average, then probably we'll get a consolidation or a continuation to the downside, or even we'll get a move to 57.5. But before moving to 57.5, before going lower, we'll have to get this move back up to $55. So oil bullish currently to $55 mark. So I'll do the next pair, which is gold. So the next pair that I'll be doing will be gold, and I'll start off gold again from the weekly chart. So last week we highlighted a possible move to touch 1240. Never happened. The following week we changed our bars to bullish setups. We were looking for 13.15, ultimately 13.25. And still we're looking for 1340, 1360, and ultimately 1400, which aligns with R2. Probably we'll get this move to touch R2 before the end of the year, 6 months still in, and we'll be looking for that move. But coming back to what is happening currently. So gold, we had a move last week, and this week we have a big move, moving gold all the way from 1280 to 1323. Moving down to the daily chart, you can be able to spot the patterns that resulted to that move. Remember, we did a video earlier indicating that 1265 was a good level to be buying gold long term, and the level was respected perfectly. My channel was actually respected, so the patterns I was using were really respected. So we had 1, 2, 3, 4 was coming in at 1265. We had a move up, a pullback to 78.6. So if I use the Fibonacci again and measure from this point to this point, which resulted to the formation of a symmetric triangle, 78.6 acted as a good level. And then we had some bullish momentum bringing this pair all the way higher to 13.25. So shorts coming in at 13.25. I've actually executed a short trade at this point currently. We have a shooting star candle in formation, and I'm looking forward for a drop to 13.05 probably, so 200 pips to the downside, but I'll be looking for 13.15 before getting to 13.05. So 100 pips first of all to 13.15, ultimately 13.05 for a correction before getting the continuation to touch 13.40, 13.60, 13.85, and ultimately 1400. So you can keep that at the back of your mind. Long term, we're looking for 1400. Short term, 13.05 pullback, good entry level for longs to 13.40, 13.60, and ultimately 13.45. Going down to the 4-hour chart, we can also be able to spot another pattern which still gives us confluence for a short trade at this point in time. So this is the 4-hour chart. On the 4-hour chart, you can use the Elliott wave patterns. So we have wave 1 and 2 already in formation. So from this point, you can use wave 1. This is 0, 1. Then you have 2, then you have 3, which is an impulsive wave. Very strong wave all the way to wave 3. So we are looking for wave 4 at 13.05 or 13.50. And ultimately, wave 5 will come in at 13.40 or 13.60. So wave 4, 13.05, using the Fibonacci concept, wave 4 will mainly rest at 38.2. I don't have 38.2 on my Fibonacci patterns, but you can bring it back and try to see where the markets will be landing. So I can maybe change this to 382, and boom, we have this. So if I change that, we ultimately have the markets going back all the way to, let me see the colors that I used for that. I used white, so maybe I can change it to black. Yeah. So R1, yeah, 13.08, 13.07, 13.05. We're looking for that level for the commodity gold. So that's a good trade, a short trade. Stops can be above 13.30. Any stop above 13.30 is safe, because we could also get some momentum to 13.40, but that's not highly probable. If we look at probabilities, they align for a short play at this point to 13.15 and ultimately 13.05. So that's my outlook on gold. I'll now jump to the next currency that I'll be doing, dollar Canadian. So starting off from the weekly on dollar Canadian, last week we talked about a move. In the bootcamp, we were actually talking about a move to break past 1.35, which took place. But the breakout was not a real breakout, because after the breakout, you never had significant momentum to push past the breakout. So what happened instead was we got a rejection at that level, and the markets moved lower. So coming back to revisit what happened, on the weekly chart, we discovered that the markets moved to touch this line the third time. So we had a drop, then we had a correction, a drop again, then you have a correction now moving to touch this line the second time, a slight drop, then we had a correction back up again. So going down to the daily chart and looking at the candlestick patterns that were being formed on the daily chart, it was evident on the daily chart from the candlestick patterns and from the levels that there was a short play coming in at this point, because one, we had the touch of the upward line, and again we had the formation of a shooting star candle, which was followed by a bearish engulfing candle. So if you executed your trade after the shooting star candle, you are sure to bank these pips. But if you never executed the trade and you're waiting for a good level execution, then how will you be able to profit from this? Looking at dollar CAD, we had this consolidation. On the 4-hour chart, I'll show you precisely the two levels which the markets were bouncing from. Then we had a move up, which was kind of a breakout past 1.35 on the lower time frames. But looking at it from the daily time frame, it was not a breakout, because we never managed to close above 1.35 with some significant momentum. So if the markets move lower past S1, if we get a break past S1, which is in confluence with the 1.3390 level, which is currently acting as a good support level for this market, then if we get a move past S1, shorts will be taking in and the bears will be taking over. So we'll be getting a move now after this correction. So probably a huge impulsive move after this correction if we manage to get a break past S1. But if the markets are held by S1 and we get some bulls coming in and some bullish momentum coming in, then probably we'll move on to make new highs at R2 and the 1.360 level, then 1.3650. So currently dollar CAD is approaching a key level according to my analysis, a level where I'd want to look at how markets react before making a decision on how I'll be trading this market. If I move to the 4-hour chart and look at the patterns that are taking place over there, so this is the 4-hour chart. The two levels I was talking about, 1.35, 1.3392. So we had a bounce the first time. So I can probably mark them out. So we had a bounce this time, the first bounce, the second bounce, the third bounce, the fourth bounce, the fifth one, 6 times, the 7th time. And now this time, instead of us creating new lows or bouncing at the 1.339, instead we had a trend line bounce, which was accompanied by a follow-up, the market's creating new highs at the R1 level, 1.3553.560 zone, which was again rejected, and we had some bearish momentum breaking past this line, and now we're moving lower, probably touch 3390. So I'm waiting for a move to touch 3390 before making a decision. I was expecting S1 to hold and a move to retest this line before continuation to touch this, which never happened. So now I've changed my bias. I'm looking at 3390 before making a decision, just like I said on the daily chart. So that's my outlook on dollar CAD, and I'll just do the next two pairs before we close down the market breakdown. So Euro USD and then Euro Yen. So for Euro USD, we'll start off from the daily chart. And on the daily chart yesterday, we spotted some good patterns. We shared with those who were on the group the patterns, and they were able to profit from the patterns we had spotted. So we are currently looking at Euro USD doing something different, but we'll interpret this information and come up with an idea. So what happened on Euro USD? So first of all, looking at Euro, we've been forming lower highs and lower lows. That has been the pattern for quite some time now. But the recent lower low came in at the 1.1250 mark. We then had a pullback, which was respected the 61.8 fib retracement. So if I use the fib retracement and try and measure, we respected this level, 61.8, had the formation of a shooting star candle, bearish momentum continuing. But now the problem is, instead of us forming a new low, what happened was we had multiple lows coming in at the 1.1250. So what happened is we got the formation of a double bottom at the 1.1205, formation of a 3-pin pattern, and again bullish momentum signifying that bulls were now taking over. So currently Euro is trading at the 1.1250, which is also a key level. And looking at the candle pattern that is on the daily chart, still time before we close, but the candle pattern on the daily chart is a gravestone doji. So it means that if this is the close by the end of the day, that probably we'll be getting some bearish momentum from this point. But before we think of the close of the candle before the end of the day, let's move down to the 4-hour chart and try to understand what's happening on the 4-hour chart. On the 4-hour chart, you can see beautifully we had this ascending channel which was broken. We had kind of a retest, but we never formed the new low. Instead, the 1.1250 supported, and now we've had a move back up with the formation of a very good shooting star candle, spiking past R3, and again being unable to close above the retest of the line that was broken. So probably we'll be getting a move first of all to touch R1 on Euro. So that's 50 pips to the downside, pretty guaranteed, before we get a move back up to touch 1300 or a move down completely to form new lows. And this trend line will now be discounted. This will be multiple corrections. So we'll have this a drop, then we had a correction, then we had a drop, then we had a multiple correction. So we had 2 corrections before for the formation of a new low. But that is pegged on the fact that the markets don't respect this line and this level. So 1.12 level R1 and the trend line, the descending trend line which has been broken, we'll probably get some good support at that level, which will be a pullback for this initial move, a continuation to touch 1300. But if we don't get that, then we'll be getting a move lower, sending this pair completely lower. So if I use the risk reward tool, for those who will be executing short trades on this one, you can have 35 pips on the upside, you can have 50 pips on the downside. If you move out, if you come out at the 1.120, having that as your first target, but you can also use 1.1250 as your second target, and ultimately the move lower will be moving to 1.095 as your third target. So those are my targets for Euro USD, and I finally close my day by looking at Euro Yen. So Euro Yen will start off again from the daily chart. We've had a huge sell-off on Euro Yen, all the way from the 127.3 zone to the 120.5 zone, a straight leg, minor pullbacks honestly on the way down. So probably we're approaching key support levels at the 120.5 and 119.5 zone. What do I think of Euro yen? Looking at it from a daily chart perspective, it's very easy to think of the market moving higher to touch the pivot points, ultimately retesting this line before moving higher to touch on 23.5. But going down lower to the 4-hour chart, now this is the importance of mixing the top-down approach and the bottom-up approach. So on the 4-hour chart, it's clear to me that Euro yen could be fast moving lower before moving higher. Why? Because we've been forming, we're in two channels. I have two channels which I can use for this currency currently. So we have the first channel, which is the bigger channel. So we had the first bounce, second bounce, third bounce, and a move lower, which is currently hanging at S1. We've not yet touched the lower line of the channel. But you can also draw a channel inside here. So you can use this 1, 2, and you get the third level coming in at this point. So using this, you could discover that the market is coming closer to touch this line, and probably the pivot point in this line will act as a good level of resistance for this market, and will be moving lower, probably to touch on 20.5 before having the continuation upwards. I'm favoring the move lower to touch on 20.5, honestly. So many confluences are aligning for that. The candlestick patterns already are showing bearish momentum. We also have the pivot point. We have the pattern of lower highs and lower lows. We cannot also forget the Fibonacci ratios. So using the Fibonacci ratios, this is 61.8 currently acting as a good level, 27.2 coming into confluence with 120.5. So we have several indicators coming in at the 120.5. We have S2, we have a key level, and we also have the lower line of the channel. So several confluences aligning for a short play on Euro yen, and using the risk reward tool, you can get a risk reward of 1:2 from just shorting down this market. So if you execute a short trade at this point with your stop loss slightly above that point and a move down there, you discover that this is a better trade actually compared to the euro. So you choose this one over the euro USD that I talked about earlier, 50 pips over 120 pips. I'd rather go with 120 pips. So euro yen short to 120.5 first, but if we get a break above pivot point, which I don't expect but can happen, then I'll be looking for R1, which will be a touch of this other line, so 120.225, but I wouldn't be executing this long trade. Instead, I'll be patient and execute a short trade from the 122.5. So, but currently short from this point to 120.5, 100 pips to the downside. So that's all from us, guys. I've shared with you 5 key setups that we think will be beneficial to you this week. Next week, we'll be reviewing and looking at how the pairs performed and how the setups aligned with the markets. And hope you guys will take this, combine with your own approach, and come up with something solid for the markets. And may the pips be with you. So as usual, don't forget to like, comment, subscribe, share, and finally invite your fellow friends to come and watch the videos that we have. So that's all.